Hi there, Christina Osborne, Houston Realty Team. Just wanted to reach out real quick and talk to y'all about how to help offset some of these expenses that are increasing due to interest rates. Whenever a buyer purchases a home, we try very hard to negotiate for the buyer what's called seller contributions. Seller contributions in a contract reduce the amount of money the buyer has to bring towards closing. So what do I mean by that? We can ask for some loans up to 3% of the contract price. So that can be significant. On a $350,000 home, you're looking at about $10,500. If we can get up to 6%, we're looking at some good money, and that actually reduces your overall expenses coming to closing. So we can take some of that money and show it as an offset to the increase that the interest rates are costing right now. So if you've got decent credit, some of the loan lenders are still able to get you 7.875, 7.5. Some new builders are allowing 4.99 still. Just depends on your builder. Anyway, we can help with all that. But if you've got poor credit, you can be up as much as 8.5% because that's prime right now. So if, let's say you've got a $350,000 home you're looking at purchasing, you put together a contract price, you're going to put down 3.5% on an FHA loan. That would bring your monthly payment before taxes and insurance, so these do not include escrows, right around $1,700 a month. If you're at 7.5%, it's going to increase your payments to $2,400 a month. And if you're at 8.5%, it's going to increase your payments to $2,700 a month. So as you can imagine, that's what, $700 more a month on the 7.5, and it's $900 on $950 on the 8.5%. So if we're able to get some of those seller contributions, $10,000 if it's 3% on a $350,000 home, you can use that money to offset some of those interest rates, and it's called a buy down. So there's such a thing as discount points that you can get with your lender on to try to buy down your interest rate, which will reduce your monthly payment. It will help offset some of these expenses that you're having to pay over the next 7 years. The reason why I'm bringing up 7 years is because that's the average that most people live in their homes. So a national average is 7 years. So I always kind of work off of the 7-year timing. So if you're able to buy down your interest rate and you've got seller contributions, you use their money to buy down your interest rate. Now, all of a sudden, these monies that you're having to pay extra per month are actually being decreased. So you can actually afford to live into your home and get into a home. Anyway, if you've got any questions, please let us know. I just wanted to throw this out. There are ways to overcome these higher interest rates, and you realtors all know how to do this for you. So please be sure, if you are a buyer, do not go buy it by yourself. You still have an opportunity to have representation, and we can help you save a lot of money. Thank you, Christina Osborne, Houston Realty Team, helping dreams come true. We're never too busy for you. Thank you. Bye-bye.